Hey, crypto friends, for those of you who are new to the channel, my name is Garrett, and I am a crypto day trader who absolutely loves moving averages. And in today's educational video, I am going to explain to you guys why you do not need a chart full of indicators to day trade crypto, and which indicators really are the only important ones that you absolutely need. Now, for those of you who love trading crypto and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the description below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you're from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so before we actually go ahead and get into TradingView and dive into some charting type stuff, I first want to explain a few things here that are very, very important here, okay? So here's the problem that I see. One of the biggest problems that I see with a lot of people who keep trying to trade the crypto market is they fill their charts with all kinds of lagging indicators, and they make their buy and sell decisions solely based on these indicators. I'm talking about lagging indicators such as the RSI, MACD, and specifically going long or short based on overbought and oversold levels, and you can't do that. Okay, you can't be doing this. This isn't a formula. That's not a formula for winning in the crypto market whatsoever. And you know what else isn't a formula for winning? Copy trading and copying the trades that big influencers make on crypto Twitter as well. All right, if you're the type of person that's doing that, you're not going to get anywhere. Okay, for instance, if one of your big crypto trader friends or one of your big crypto traders on crypto Twitter that you follow and that you trade off of on a regular basis, if their account ends up going down, guess what? You're gonna be shit out of luck, because you're no longer going to be able to have anybody to trade off of, and since you don't know how to trade yourself and trade independently, you're basically screwed there. Okay, so that is why you cannot be copy trading or copying other people's trades, because realistically you're not doing anything and you're not learning anything by doing that. So for those of you who might be watching this video right now and have done this, do not beat yourself up for it, because I also did all of this back when I first started trading crypto years ago as well. But the goal here is to become a better trader overall, because realistically, trading is literally just a skill, just like any other skill out there. And it takes time and years worth of learning from your own mistakes to actually get good at it, which is something that I actually did. All right. I failed at trading for probably the first year and a half or so. And I didn't actually start trading by myself and start kind of figuring out my own strategy that works best for me, myself, and my own personality until after that. And I've been kind of smooth sailing with it for the last 2 years or so now, and it's been great. So let's go ahead and actually get back to the part about filling your charts with lagging indicators like the RSI and the MACD and other random ass lagging indicators like that, okay? To put it simply, you do not need them, okay? You really do not need these types of indicators, okay? I mean, yeah, you can use them for overall confluence and stuff like that, but you do not need them to make your buy and sell decisions. All you realistically need to trade or to day trade crypto are basic moving averages, candlestick patterns, important levels to watch, and basically common sense. All right, it's all in the head. It realistically is. And I'm going to briefly show you how to use all of that in this video, simply because I am a huge sucker for moving averages and I use them on a regular basis, and I absolutely love them and I do great with them. So what I'm going to be showing you guys here in this video, in this charting video, is I'm going to be showing you how I use my moving averages. I'm going to be showing you basic candlestick patterns that I look at on a regular basis, and I'm going to show you how I create my support and resistance levels, or how I mark them out, okay? So we're going to go ahead and go to the Solana chart here, and the reason why I have the RSI on is to just show you an example, okay? I do not use this damn thing whatsoever. I'm just going to show you an example real quick of why you shouldn't use them, or why it's important to not use the RSI indicator to make your buy and sell decisions, okay? So for example, all right, this is the daily chart for Solana, okay? Price action, we had this high back here in November. We had this high back here of around $264, and then we started to come back down and we started to have a correction, all right? Then we hit this support level down here, which is a support level of a high that we created back in October, all right? So we hit this support level. We did not go down any further than that, and we ended up kind of lagging in that area and going back and forth up and down for a little bit right in there, okay? Now, this is where it gets interesting. We went back upwards again to kind of relieve that overall downward pressure that we had from going down, but it was not able to be sustained, and we did not end up breaking any kind of key levels going back up to the upside. So it resulted in a move going back to the downside. Now, when we did go back to the downside, if you can notice here, you can clearly see that price action kind of stuck around back in this same area where this key level of support is right here, okay? Now in the RSI, you can clearly see that the RSI did not go all the way back down to technically extreme oversold levels. So therefore, you may not have entered a position because of that, or you may not have entered or gotten in on a long position because you were trying to make a decision based solely on what the RSI was telling you. So this is why I do not like lagging indicators like the RSI, okay? Now if we go ahead and turn off this RSI, all we have left is our support and resistance levels, okay? So now, this is what I want to explain here, okay? So as far as support and resistance levels, I basically usually only, when I'm trading, I usually only mark out the 4 most recent levels, meaning the 2 most recent lows, or the 2 most recent support lows, and the 2 most recent high resistance areas, okay? So as you can clearly see here, we've got a high resistance area here, right here, which is our previous high here of $264. And then we've got this massive, much larger one here at $295, which is the very top of this wick that we had back here on January 19th, all right? Now, the support levels I have marked out are this most recent high that we had back in here before this current high that we just recently had, which would be right around this $220 area. And then we've got this other layer of support down here, which is from this high again from October 29th, around $182 or so, okay? So if you were to have traded this, or you could have easily traded this without using any kind of fancy lagging indicators or any bullshit like that, just by simply looking at your levels here and looking at the simple moving average that I've got right here. So right here, this purple line that you've got, or that you see squiggling around everywhere, that is my 7-period simple moving average, okay? So basically what happens here is price ended up going back down, and we did end up sticking around this support area. So because we ended up sticking around this support area, that tells me that momentum in the overall coin right now, or momentum in, or bullish momentum in Solana is still pretty bullish realistically. Yeah, there's a lot of bears there, but realistically, this is the common sense part I'm talking about. Realistically, we can clearly see just based off of the candle structure alone and where the candles are sticking around, which is right around the support level, we can clearly see that bullish momentum is still there, and that bulls are fighting back at bears trying to make the price go down even further. And as you guys can clearly see here, in this situation right here, the bulls ended up winning and the bears ended up losing. And you can see that just by looking at this simple candle right in here, okay? Now, this is kind of what I'm talking about looking at price action and kind of making decisions based on price action rather than indicators alone, okay? Because just looking at this one candle alone right here tells a very, very big story, okay? So we've got our support line right in here again, and as you can clearly see, price ended up going all the way down, but it ended up retracing all the way back up again, and bulls ended up taking over because we have this extreme, very good, solid level of support right in here. Therefore, we ended up closing the candle right on the support level and not below it, and because we ended up closing right at the support line and not below it, that tells me that, okay, things are still pretty damn bullish, and we may be due for some upward momentum here. And as you can clearly see with the next daily candle, that's exactly what happened. We opened up green because bears ended up getting exhausted and bulls ended up taking over. And as you can clearly see here, once price action ended up crossing this 7-period SMA that I've got going on right here, boom, that right there tells me that momentum is back and bullish momentum is back, and we are going to start heading higher, okay? So right there is where I would have entered a long position, right at this kind of little area where, let me go ahead and put on my brush tool and mark it real quick. See the tops of these candles here, where we were kind of ranging at support? The tops of these candles, once price action and this big green candle started to pass and breach past the tops of these wicks of these candles, that tells me that we are insanely bullish again, and I need to enter a long position. So I would have ended up entering a long position probably right in this area, because we've got Not only do we have the cross of the simple move, or the simple moving average right here, the 7-period simple moving average, but we've also got bullish momentum going upwards and past all of these empty wicks back here that we've had from the past previous 5 days as well. So that tells me that we've got some pretty damn good bullish momentum. So I enter my long position kind of right in here, okay? So we'll go ahead and mark this right here. So you enter your long position right in there where the pink line is at or so, okay? Let me go ahead and, you know what? Actually, I'm going to go ahead and just put an arrow there because it's just simpler. All right, so I would have entered probably right around in this area, okay? So now, as price is going up within the next 4 or 5 days or so, as you can clearly see, the next level that I'm looking at here is, since we did end up creating a high here, my first instinct is going to be, okay, well, I'm going to take profits when we reach this resistance area again. But there's also a chance that we could end up going through this resistance area and going even higher up to the next resistance area of the previous big high back here of $264. So the thought process there is once we start going up to this resistance area, you want to move your stop loss into profit. So once you move your stop loss into profit, which would be right up into this area of $220, you will be waiting for this next candle to start going up. Therefore, if the next candle does start going up, then you're pretty much good to go. If it just starts going down instead, then it's going to sell you out of your position and you'll end up taking your profit, and you would have ended up making your profit. So if the price would have ended up going down from here instead of up, you would have made roughly around, let's see here, profit wise, if you were using like 10x leverage, you would have made about 130% profit there with 10x leverage. Okay, now if you put your stop loss here and as the price was continuing to go up even further, then you would have been safe because you would have entered, since you would have entered way down here, you would have made roughly around, let's see here, right around 350% profits with 10x leverage there. Okay, so this is just an overall example of how easy it is and how simple it is to realistically trade just by looking at previous levels of support and resistance. Candlestick patterns, as you can clearly see, we've got this candlestick pattern right in here. Price action did end up going all the way down far, but we ended up retracing back upwards again, and that's a damn good thing to see. So realistically, we've got a very strong bullish candlestick pattern going on right there. And also on top of that is the moving average aspect as well. All right, we've got the cross of the moving average going on right here, and as you can clearly see, we went up and closed this daily candle pretty much right at this resistance area. But instead of the next candle opening and dropping from there, bullish momentum was still there, so it continued even higher all the way up to this next level of resistance going on right here. So that's kind of overall here what I'm talking about here, guys. So overall, I know I gave a lot of information, a ton of information, but that's what I do. I love helping people. I love educating people on this stuff, and it's just what I love to do. So before I go ahead and wrap up this video, if any of you guys want to see more educational videos like this, you can find all kinds of extra educational videos just like this in my technical analysis playlist here on my channel. You can find it right here if you go to playlists, and it's in my technical analysis playlist right here. And every single educational video that I do, which is pretty much all I do nowadays, will be in this technical analysis playlist, okay? So just something to go ahead and keep in mind. But before you guys leave, if you guys enjoyed this video, be sure to go ahead and subscribe to the channel, hit the like button below the video to help me out, leave me a comment below on your personal thoughts of what you thought of this video, and with that said, a big thanks to all of you who stuck around for this entire video and watched this whole entire thing, and I hope to see all of you in my future videos.